How's it going, everybody? I'm Potter Stocks, and this is the PotterBox, and this is basically a full breakdown on what it is, how to find it, and that's it. I will be making videos on the punchback strategy and some things that go along it, entries, exits, stuff like that. I will brush up on them in this video, but we are just looking for PotterBoxes. Now, that's it, so it's going to seem incomplete. It's not going to be complete analysis, but we are going to, obviously, in order to make a play, we got to be able to find these areas of consolidation and the structure within them. So this is something, it's a fractalized strategy, meaning that if you can find it on the weekly, then there should be the same things down on the bottom, right, with more detail. So the first thing, and we're just going to focus on kind of like the middle area. The first thing that we want to do is we want to identify where buyers or sellers, control the price. Okay, and that's just, we're looking right here in this area of consolidation, and right here at 207.50, the price is not allowed to go above it, and when it does, we move up. Now, the second thing that we want to do is find our buyers. Okay, so buyers are typically or always at the bottom, right? And their job is to simply hold that price up. So you have buyers, you have sellers, and then in the middle of this, right, there's going to be something called cost basis. This is the most important thing that when it comes to my strategy, period, in the story. And really, it doesn't matter if you're just buying equity, you're long-term investing, you're scalping, you're swing trading. It doesn't matter. Cost basis is king. So that's the PotterBox in and of itself, right? And of course, we're going to go through some examples here. Right here, you can find another floor. You can find another cost basis. And of course, you can find your sellers. Now, on the weekly, this is going to give you the widest range, right? It's not going to give you the specifics. And when you move down, yes, it's going to mirror the same levels, but there's going to be greater detail, meaning that you might have to adjust or move that analysis, or rather not move it, but just see how that lower time frame feeds into the daily. This is a mechanical system. It all works together. So that's it, buyers, sellers, and cost basis. And this goes for any and every single form of consolidation that you can find. So even if you would like to highlight areas like this, right, and its floor and its cost basis, right, which just happens to be the rejection point there, and it also happens to be the floor. So you will find yourself with overlapping boxes. This is actually a good thing, and I will explain that in kind of a brief recap of the play, one of the plays that we took. So that's the weekly, right? We can find large areas of consolidation. We can, and we'll do one more. So up above us, we can, and here's kind of the specifics, right? Because a lot of people struggle with this. Candle closes, okay? So we want to see that when a candle closes in that box after reclaiming it, that it goes up and it hits resistance, right? Hits resistance. Not a single candle closes below that mark, and when it does, it falls, right? And it goes and retests something below it. Right here, you see another bounce, right? Here, you're opening below, and you're trying to reach up. And now that we found buyers and sellers, where do you think that rejection came from? Cost basis. So again, cost basis is for the area of consolidation, decides whether or not buyers and sellers like the price, or whether or not you hit resistance or support. So even when we're looking down here, right, or on any time frame, if you're at the floor and you bounce and you break over your cost basis, you will go to resistance, right? If you reject and then fall back down and close below that cost basis, you will go to support. Now, we like the magic number 3, right? So typically in any area of consolidation, it's 3 off the top, 3 off the bottom. And if it leaves 2 off the top and nothing there, then we like to go and look for a potential reclaim. And this is where I'll be making a video for you all on the punchback strategy, which is pretty much the entirety of everything that I do. So that's the PotterBox on the weekly, again, just one more time. There's just for a different floor, right? There's our floor. There's our sellers. They don't let when the price closes above, then makes a new high, right? And our cost basis, that's usually it is always found at the 50% mark of any area of consolidation. So that's it. Now let's move to the daily, because again, if you find it on the weekly and that's something that's playable, then you need to be able to define that on a lower time frame. So excuse I'm actually trading Tesla. So we're going to do the same thing here. And obviously I have very little, so you're going to see the entire process from start to finish. And this is in greater detail than it was before. So you're going to see slight differentiation, or sorry, you know what I'm talking about. You know what I'm talking about. Variations, excuse me. Slight variations between the charts. So first thing, I'm going to kind of start in the middle, right? And I see an area of consolidation here. So I'm going to highlight that. And I like to kind of drag it across. And that so you are going to find that, of course, a lot of these things piggyback off of one another. So now we have an area of consolidation here. We have an area of consolidation here. And this is, again, where do the candles close? Because if you go and make a new high, that's not in the box. That's not under seller containment. And there's a story behind that. There's a story on why we like candle closes, right? Because those tell us where control is. So regardless of where the wick goes, it's where the candle closes that's ultimately where sellers control the price, right? So here, right, you can wick up all you want, but it's not until a candle secures a close that you finally either A, see a resistance tapped above you, or a new high. So that's PotterBox number, that's one, that's two, right? We got another one right here. That's three. Now, again, you're going to find that there's always typically some sort of price respect around the 50% mark. And this is a deciding factor because it is where buyers and sellers decide whether they like the price. So again, this is a sell wall turned into, obviously, sellers cannot hold and buyers take over. So this all piggybacks off of one another, right? So let us continue, because there is more. And when you're charting the PotterBox, I like having a shaded area, and I do like color coding, right? So yellow is cost basis, green is buyers, red is sellers, right? So right here, you've got another area, and then it's median. Look at the wick, right? So when you finally candles close, candle open, right, or closes above, you reach a new high. That's the cost basis. You reject and you pull back down. So again, cost basis there. And then we've got our floor, which just happens to be, we don't even really need to drop it because it's already established as cost basis, right? So you're kind of seeing how these all stack up on top of one another. So that is buyers, and I've a little bit further down, excuse me. So we're going to pull that down again, candles closing. So just a little bit further down. I want to make sure this is perfect for you guys. So there you go. Buyers, 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 right? And then when you lose the channel, you reclaim it, kind of like when you're rock climbing, you hang on to that edge and you end up moving to the upside there. All right, so we've got more. And again, I'm going to recap. This is a trade that we took. And so I'm going to recap why, and this will brush up on the punchback. But again, sellers, buyers, 50%. Where's the rejection? Cost basis, always. So that's just and you could go deeper, but what I tell people is when you're on the daily and you're on the weekly, you want to find the most important ranges. You don't want to, there is consolidation here, there is consolidation there, and all of those have their own cost basis, but those are better defined when you move on to a lower time frame. So I do like to go with most recent price action. Okay. So I am looking left to a degree, but I'm not going to 5 or 6 years ago unless, right, the weekly is fine, unless I can go back and see that it has relevancy, right? And so if I like pull it back here and it doesn't line up, I'm not gonna pay attention to it. I'm looking at the most recent price action. So as Tesla goes and reclaims some of these levels, naturally, right, I'm looking here and here for my Potter boxes. So let's talk a bit about how this plays out, right? And again, if you would like to go to our Discord or even look on YouTube a little bit further back, you'll find some of the videos of me talking about my price target on Tesla. And one of them, we're going to go zoom down even further. But here's the deal with this trade, okay? So this is a brief explanation on the punchback. If you have buyers and sellers, right? Sellers have one job when they pull something back down. Obviously here you get a punchback, right? Because a punchback is defined as, and this goes for the up or the down, right? And you can even see it here. This is a punchback. So anytime you leave your area of consolidation, if that's up, and you experience a rejection and then pull back down and break cost basis. Now, yes, there is a potential entry here, but cost basis is also where you can bounce. But underneath that, where buyers and sellers decide that they like the price, that is where you're going to essentially know that you're going to make a new low. And that's your job, is to find where is that new low. So the same thing goes to the upside. If seller's job, right, is to push off this cost basis, they like the price, you break through this cost basis, that's the punchback, and you're going to make a new low. Seller's job is to send it to where sellers control the price. That's very, very, very far away. Down here in this area of consolidation, you have very little in here except for imbalances. So we end up getting a bounce off of, psychological, close to a psychological number, around, well, pretty much 150. And here's where we're going to zoom in, because this is the daily, right? This is good for equity. At the end of the day, if you're looking at a candle close above cost basis, you can go ahead and it's slower. You have equity, you have shares, you're good. But once we find the play on the weekly and the daily, and we have structure like this, then we're looking onto a lower time frame where we can find entries. So reclaiming the floor, and we're going to go zoom down and look at that, but we reclaim the floor, and then we break cost basis. Okay, so this promises you a new high compared to the box. So you will leave the box and go to your next resistance, and that's your job to find out where that is. So by losing the floor, then reclaiming it, you are now bullish up to cost basis. And if that is broken, you are going to make a new high or a new low. So here's the deal. Now we have a punchback. We've broken that cost basis at 181. And so that promises us a new high outside of the box. And that first new high, where do you think that is? That's cost basis in this area. So what it does is it sets off a chain reaction. This is basically an insertion of volume and liquidity, right? So we're putting in volume here. You see nice accumulation on top. We're gathering our shares, and then a movement up to that 126. Now, that's the new high. And sure, you could potentially reject it. But for the most part, with that upward sellers, there's also a dynamic to this where if seller's job was to push it down and send it to buyers, and you've punched back up against that floor, what are people who are shorting the bottom doing? They're getting out of those trades, right? And you're typically going on a reclaim of any floor, you're going to see a little bit of chop. You're grabbing on to that floor. So sellers back up against the wall, you're already in their average. Cost basis is where buyers and sellers decide whether they like the price. So all of this overhead volume is suddenly forced out. Now, if you look on that big rip from earnings, volume on the short side rose to a all-time high. So that in and of itself, right, we disperse of those sellers through this consolidation period, sideways consolidation. It's hard to hold through a short. If you're not at the very tippy top, you're probably getting stopped out. But with a mechanical system like this, we know where those price points are and what must break in order to see a new high. So, and if you look, right, we broke through this cost basis, punched back, reached a new, this wasn't a cost basis yet. That was the only cost basis we had, and we pulled back. So now that we have all this volume up above us, right, and we're digging into these sellers' averages, and this is promising us a new high. And again, I have never seen it happen any other way. And until it does, this remains the highest probability trading strategy that I feel that I could take advantage of on any time frame. So as soon as you get up to the wall, of course, you're driving any remaining sellers out, and that fuels your upside, right? Sellers who cover, they buy. So with the promise of a new high and a break, right? So as soon as you are, and it's not too far away, you break that high and it triggers another cost basis break, another cost basis break, right? Look at this giant red or green candle, right? You power through that cost basis. And of course, one of the first places that we hit is the bottom of a box above us. Now, there was no catalyst, no PotterBoxes, right, to send us up as far as the higher time frame is concerned. So we actually, as soon as we get through all of this overhead volume, and really, you know, it's a shout out to shorts because you're the ones who helped us get up here, right? But when you are in empty space where there's less volume, that's when things start to die down because you don't have those triggers to give you that next move up. So that is essentially, and for us, we took the play here at the bottom floor, right around that bottom floor and cost basis break. And so at that point, our target was the gap at 266.75 and the cost basis mark above us at around $300. And again, this wasn't something that I'm just saying now. This was exactly what we talked about. Now, that's great, right? So we found the play. Everything looks good. Nice areas of consolidation. But how do we play it, right? We're going to go to a lower time frame, and we're going to do it again. So we move down, and now we see that box, right, that we were just talking about. We can now identify that box here, or see where that structure is reclaimed, right? And again, we're going to have to identify bounce, right? So here we go, right? We're going to go ahead and do this again. But this time, we're going to be looking down, and we're going to go all the way to much lower time frames. But we know, right, and a lot of the times you don't have to draw it on a lower time frame if you know where you're at. Again, every morning you should probably know where you're at. But this is the box, okay? So here we go. This is where the beauty of this strategy reveals itself, okay? So right here, where we bounce, right, and again, punchbacks happen. Even on these lower time frames, you've got a cost basis, right? And this is, of course, created by the area of consolidation below you. You pop up, you retest the floor, you pull back, you do not lose that area that buyers control, and therefore we get a nice accumulation. Now you'll notice, and this goes to the 1, 2, 3 rule, okay, because you don't always have to go make a new low in order to make a new high. What typically is going to happen is inside of an area of consolidation, right, you're going to exhaust one side or the other. So above cost basis, resistance, back down, back up, back down, back up, back down, 1, 2, 3, 1, 2, 3, you are going to move, okay? And where you open, oftentimes, and it's actually right here, sorry, where you open is going to determine how that goes. So as you'll notice, this candle, right? And say for this one, which is the first attempt to go and retest, is the only candle that opens on top of cost basis, therefore giving you a new high. So again, we can look left and we can find areas of consolidation within this box, right? And we can use that to find our next highs. And I'm looking for the buy floor right now. That buy floor is on the candle control, and this is with after hours data, folks. So you might have to switch it on and off in order to figure out where those candles actually open. But let's look left. So this is the 4 hour, and I am going to zoom down because this is just a really a great overlook, but not as far as execution is concerned. It's still, we're still troubled with entries and exits, right? The same thing that a day trader with the PotterBox strategy would take to the upside. Obviously, he should or she should know that there is a potential daily move or weekly move, and that's going to allow you the ability to day trade. So you're going to have to, whatever day trade that you see, right? If it's a day trading entry, then it should be good for your swing trade entry. It's the same. It's a fractalized strategy. So again, we and just highlighting again, I want to highlight what's most important here. So we have, and I'm going to piggyback over here. We've got buyers, we've got sellers, and we've got our cost basis. Okay, cost basis is also right here. You can see that that's the floor, and of course it requires, you know, an open right there, slightly above those candles, and then a bounce off support where buyers are at, and a squeeze out. So this is great, right? This is all good and well, but this is where we have to zoom down. And I am going to open up the multi-time frame. So you're going to see two different time frames here. We're going to go to two, and let's do side by side. All right. So again, remember what we're doing on the daily, right? When we're over here, and this is all the little charts that I'm posting right now. And then we're going to go down to the hourly. Okay. So I'm going to zoom over here. All right, now this is the most beautiful setup I had traded. Again, I'm still living off money I made on Tesla. I've made some investments off of this. I've flipped that money and put it into more Tesla trades. This has been and is, you know, on record one of the cleanest trades on Tesla that we've seen, obviously, all year. Just in terms of rolling our contracts out, continuing to gain profit, it was a beautiful trade. So here we go, right? We know where we're at. We're on this floor. We've got our cost basis there. We've got our sellers right here. And this is like a tar pit, right? So you're essentially, anytime, if you fall into that floor, you will go to cost basis. If that cost basis breaks, that's a punchback. Let me do this. There we go. So there's our buyers, there's our sellers, and again, I like to color code things so that it makes sense. Now we're going to do it again, and this is where things are going to differ from what we have found on the 4 hour, right? It's going to be slightly different. So you'll notice that, and it's the same thing, right? It doesn't change the play. If you still open outside of that box at 177.44, you're good to go, and that's perfectly playable. But can you make it better? Yes, you can. So sellers, now again, what am I focused on? Candle closures. So I'm looking at the candle closures, and that is going to tell me. Now, 1, 2, 3, right? 1, 2, then a break. Now what happens if you make a new high and then you punch back into the box, right? What do? We make a new low. So now that we know that we've punched back in the box, we know that the new low is the box underneath us. And if we punch back into that box, we're going to cost basis. If cost basis is broken, then we'll resume the downtrend, right? So that's Tesla. Now, here's the beautiful part. When you see a stock reclaiming or holding a floor that it's broken back into, that is buyers accumulating and buying out the bottom, right? So you're essentially adding more volume to that floor. And this is if you want accumulation. And again, just to tip our hats at all these weird pattern traders out there, that's a bear flag, right? If we're drawing stupid trend lines, we don't do that. Look at this. This is that stuff that loses people money. And why did that squeeze so hard? I tell people all the time. Again, seller's job here when they punched it back in and broke cost basis was to drive it into seller control. They were unable to do that. So when you get this move right here and a bearish pattern and you pop out, you get a big strong move because we're also covering and sellers are getting dispersed. So now we've got a beautiful 1 hour. We're looking to our left. We can see both. You can see how it is a little bit different. Now on the 4 hour, not many candles, or if any, none, close below that floor at all. You sit right on top of it. And that's the little things that you can't see unless you are doing top-down analysis from the weekly all the way down. Tell the story. If you can't, you don't have the proper breakdown on what you're trying to do, and you're going to feel confused. So anytime that you break back into a box that you've lost or an area of consolidation that you've lost, and you break cost basis, right? Which I keep moving around. There we go. So we break cost basis, right? Right there, you open, push. That right there promises us, I don't care what anybody says, it promises us a new high. And if you think about it in terms of what is happening here and what would you do when you first started, it's the same shit, y'all. There are people with a lot of money that are just as that are not that good at managing it or trading with it, right? So there's our sellers. I'm gonna borrow the one below us. There's our buyers. We reclaim the floor. We punch back. Now, what does that do, right? So you have to know how does this hourly setup translate to a potential new high above me, right? And again, we're going to rinse and repeat, and we're going to do the exact same thing. We're going to find out, where are buyers? And sometimes you may have to revise your chart. You're not going to find it at first. Candle close, candle close, candle close, right? You do make a new high. And one thing I will say, with any punchback, and especially in an area where a stock is heavily consolidated, as soon as cost basis is broken, and we just saw this with Tesla, you can go back up to where sellers control the price and grab a better average. That's what they're doing. They're grabbing a better average. You get two top rejections right there, and then you open below cost basis, try to go and fill the gap, and you fail and you flush, right? And that's also fueled, mind you, by another area of consolidation, and its cost basis, you'll never guess, is right around there. So basically right at that floor. So again, these things set up potential chain reactions, right? And that's the highlight here, is there's chain reactions that happen because of these cost bases. And cost basis, again, is where buyers and sellers decide whether they like the price. So of course, that's naturally where one would assume that cost basis, or where the most volume is an input and the biggest move is going to be had. And now that I'm kind of moving this chart around, y'all, and again, don't be scared to be wrong. Right here, that is a new low, okay? So a new low is defined by anything outside of the box. Look at what happens when you open outside of the box. And again, it is always the open. So even though you did get the punch back, this one still wanted a new low, especially breaking that bottom cost basis. So you end up going to the top and you end up flushing down. And again, I talk about, we just did that. We literally just did that. We had a box, right? We punched back and then we went up to the top, grabbed a better average, and then we ended up using this little box and that top to reject the top and then drive it down to some lower areas of consolidation. So anyway, what happens if this hourly punchback occurs, right? What does it imply? So we look left, we see that Tesla has a gap from 181, 181.67 all the way up to this 184.18. And again, if you just drop it right there, look, that cost basis is this resistance. So by filling the gap, which again, 95% of gaps are always going to get filled. So add one high statistic to another. And if you get the punchback, right, you are more than likely going to end up making a new high. You're going to go make a new high, right? And so what we can pull from that chart, or from the daily and the 4 hour, and then down on the 1 hour, identifying that punchback, is that we are going to more than likely, right, fill that gap and continue moving to the upside. And so our job is just to simply find where is that new high. And hence why we took positions at the break. I rolled those positions out, and this is actually on my birthday. If you want to go in the Discord, go to May 18th, you can see where I took that position, because when it came back down, it refused to go into that 173. So by buying at the bottom, right, the worst thing that would happen, and obviously by the end of the day we had advanced, the worst thing that would happen is we would gap down, back down to support or slightly underneath it, and that'd be okay with that. Okay, so all good and well, right? 1 hour moving into the and so now we've established that we can take a weekly time frame idea, right, and we can turn it into, and just to add, you know, the cherry on top, we have this wild trend here. So not only did we have this, right, dynamic, and I use standard deviations, we had the curl back up, the punch back, and then this honestly let me know that there was just wide open spaces. And so taking a position here, obviously down there, and then rolling it out each time a cost basis was broken, allowed us to have one of the biggest gains. And we did. We saw a lot of people go from $1,000 to 50. You know, not everybody had a Cinderella story like that, but it was good. All right, so cool, Garrett. Now we've got that, but what about this hourly candle, right? It opens and it just shoots up. How do I know it's going to close? On a lower time frame. So again, you should always be able to tell the story. This is what we've been doing today. Nice little box on Tesla. And this is going to take a second because I'm going to have to scroll back forever. All right, so let's see here. Gotta make sure. Yeah, I'm not even into May yet. I don't know if they're gonna let me. No more data. All right, so unfortunately it's not letting me pull it back over, but I will just simply use the examples from today. Again, we're here to identify where our boxes are. So can we find the same, and again, if we can find it on the hourly and we can see it on the daily, then we can use those lower time frame triggers to take our trades. Okay. All right, so here's the deal with then we're going to use the most recent price action. So let's go ahead and let's zoom in a bit. And again, this is something where we're right here, and I had a this is a pretty straightforward, right? You drop into the box, you bounce off cost basis twice, you're unable to reclaim anything above you, which would have happened right here. You did hit it, you rejected, and then you actually built some volume right there. So you actually have overhead volume, and that has its own cost basis. So what do you think we're going to do when Tesla breaks back up and is above cost basis again, we're going to be looking for another chain reaction, right? Because we have a multitude. We actually have a cost basis there. You have a small cost basis that mirrors the floor, and then you actually have a cost basis inside of another box. So it would be a if this, then that, and then gap fill. So right now, right, we're looking at Tesla. We are able to identify buyers. We are able to identify sellers, right? And we have our cost basis. Now, I shorted Tesla off of the, so look, again, box, floor, oops. There you go. Cost basis. See how those candles stay underneath, right? Just a little bit higher. There you go. That's cost basis. And of course, the sell wall. You guys can see how that's kind of mirroring. And then of course, I'll just use that. That's our buyers. So we swung from that 267 rejection, right? And again, there's a multitude of different triggers, and so identifying these boxes is, I don't want to say as simple as, but it is on every single box and in every single time frame. So there's consolidation. I mean, zoom in with me. If you're casting any doubts, notice where you wick off of when you make a new low. That's the 50% mark in every box. That's cost basis, right? And that's just a tad higher. There we go. So taking Tesla off of the rejection, I obviously am looking for that. You get a candle close in the area that sellers are trying to contain right here. So this first candle, right, you see it wick up, gets pulled back down, it's under pre-market lows, drives down through this box, which has its own cost basis, which then allows you to take a short down to your first box, right? Or whatever it is that it is your, and so we're going to look at these triggers, right? So there's trigger number one, another box where we're able to identify buyers and sellers, and it has a cost basis, right? So break, a punch back, right? You have another area of consolidation. I won't box that one up. Now look at the candle. Look, this is just 50%, y'all. Just 50%. Look at the candles. Look at the first candle that closes back up above it. And then what happens afterwards. So that, right? And this is the 15-minute. We're not done yet. We're going to go down even further. Because again, this was something that I actually found on the daily and traded on the 3. With obviously keeping in mind the hourly, all that good stuff. So anyway, we end up punching back through that box. You go to your next new low, and this time we do not. So any area of consolidation, we do not punch into that box. We bounce, you close above cost basis, and then you get a punch back, right? That gives you a new low to the wall of the box, and that is cost basis again. So we move down, and I go either from the 15 to the 5, but I'm going to go to the 3, and I'm going to show you guys just how I took this trade. So again, and this was a Friday trade. This was a 600% like weekly trade. This was a series of chain reactions that I was able to identify on a lower time frame. And the fact that we bounced back up gave me all the time in the world, and I called everybody to the Discord so that way they could take this trade with me. So here we go. This is the same box that I just showed you on the left with the same cost basis right here, right? And then of course your buyers, and I'm not going to be able to color code every single one of these, but because there's a lot. So again, in pre-market, you create structure, you pop out of it, you punch back through it, that gives you a new low, you punch back through that low, which you bounce off of in pre-market, which is cost basis, you flush, right? You do see a little bit of consolidation, you're putting volume on that chart and something to punch back through later on. So Now, here's the cool part, right? So that's punchback, right? That's a cost basis mark. Now, this floor is also a cost basis mark. Why? It's dead slap center in between any area of consolidation. And when you have a box with a box centered around the floor, then that is oftentimes what is going to give you that snowball chain reaction flush to the downside. And so then we do it again, right? And this is good. It's a little bit mind blowing because the shit gets pretty crazy when you think about the move that is implied or the move that you got. It's pretty crazy. So right here, and this is also, you know, an area, and I need to bring that down. So right there, and it's wild, folks. You actually have another tiny ass little box that's using, it has a different floor, and is basically just oscillating there. Now you could just completely ignore that because honestly, it's such a small box. So small box, low volume is not really worth my time or my energy. So now at the end of the day, when I called people up, and I will say I am really, 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 really good at finding trend or control before it happens. And this helps me identify where I want to take certain trades. So again, we get that high. I told everybody that if we broke the cost basis above us, that we would break. But because we were at the projected downtrend, because again, before this existed, I drew this right here. On the second bounce, I already had this channel in place. So when we hit that lower box, pretty much everybody who took weeklies, you know, that's your exit. But then longer expirations that I took on the punchback, I'm still short because again, we're looking for what? A rejection off the top as you drop into the box and a new low. And what is going to give you that new low? That little area of consolidation, right? Which is basically below us. And we're going to need to see on a Friday that you're closing in that box, right? Or that you're punching into that box. And not only that, right? Don't forget, we have a overhead cost basis mark at 257, right? And where is that? Let's see. So that's 257 right there. And look at the waterfall that happens on that break. So anyway, right? Let's explore further because there's a lot more to unpack. So that's that box that I showed you guys on the lower time frame, or on the higher time frame, excuse me. And then once again, right? You actually have a box right here that is sharing its floor as this cost basis. Okay, so can it get complicated? Or I wouldn't even say complicated, but it just requires that you actually go back and look. So now that we've got all of this in order, right? And I call everybody towards the end of the day, what I'm looking for is essentially, yes, we want to punch back into that box after leaving it. You left it. You tried to go break into the box above you. You failed. So if you can't go up, you're going down. And if you can't hold the floor, and you can see its desperate attempt to do so before finally giving over to those sellers. Now, this is so beautiful, y'all. So right here, right, obviously we have that floor right there, but we see that on this mark, okay, where there's, I kind of pointed out that previous area, that cost basis, you see the wick, and then you start to waterfall. Now again, they're everywhere, right? The cost basis marks are everywhere. So you're going to see if cost basis means that buyers and sellers like the price, and every time you move down below cost basis, shares are being pulled out of the market, and you have how many, right? So again, right, you have that one, that cost basis, so you break back into the box, you break cost basis, speed it up, right? Break another cost basis, speed it up, break another cost basis, speed it up. So now these floors that you had before, they're not going to be able to hold on like they were, right? Cost basis again, right? Speed it up. Now where do you close? Cost basis. So I'm using that play to obviously help identify and show you what we're looking for. And it does mean that you have to fully dissect your chart and understand it is a simple concept. It just takes time. It's not easy, and you'd be surprised how many people are just deterred by that, right? And it is easy. I will say it is easy. It just takes time, and that's the hard part. So buyers, sellers, right? And that's it. There is something to be said, of course, about after hours. Not every time are you going to see after hours abide. There's oftentimes that you can actually leave resistance and then in after hours and then gap back down below a floor. But I do use after hours. I do use after hours to identify exactly where everything is at. I mean, the majority of the movement in the market happens in after hours. So why wouldn't I want to be privy to what is actually going on? So all in all, again, you got a brief punch back, you got more than that. And then on top of that, we're also learning, identifying boxes, how to do that, which is a simple process of where do buyers hold the price and where do sellers hold the price, right? And we can typically 50% that. And that's where, obviously, in after hours, you're fluctuating, but you're trying to sit on top of it with the hopes, I'm assuming, of opening tomorrow on top. Now, again, the same thing. You've got top of your box, right? Bottom of your box. And it looks like its cost basis is right here, which is where you end up rejecting off of. So, anyway, this is the only way that I trade. I am using essentially other people's leverage against them. So I'm short with sellers, right? So if you punch back into a box just like you did and you bounce back up to the floor without actually making a new low, then by all means, that's what I'm going to do. So just to finish this, obviously, this was the box. That's the box right there. You closed on that cost basis mark right here. And then in pre-market, we got news, which again, the chart was already set up to dump. So I don't want to hear the news did it. It doesn't. That's not how that works. Now, look, you also have an area right there. And that is where you rejected in pre-market, another cost basis. So it does get more intensive as you move down in time frames. But what you're only looking at what's most relevant. You don't have to go and chart every box that has ever existed on that chart, right? On the hourly or the 15-minute. If you're trading right here, you need to know where the big structure is, right? Where's the big floor? Where is my cost basis? And where are my sellers? That's it, right? When you move down, that's when you're trying to figure out, okay, what is that box, right? And where exactly does it need to break in order for me to take that trade, right? So you get a punch back, you get a new low, and then we look left, right? And you'll notice punch back, right? That's an area of consolidation. It's just a little bit lower. And then again, look, cost basis. Okay. And then one more cost basis. Now, where do you go? You punch through one, punch through two, hit your cost basis, bounce, hold on to the buying floor. See where it takes off. And now we are stuck. So why did we chop today? Because this is your buyers and these are your sellers for right now, right? Because you break cost basis. We're going to, if you break it again, but after retesting above you, you're going to go lower, right? So we would be looking for Tesla at this point. We would be, so look, now what's the next trade? So, you can go and back check this. So if we end up, say, rejecting, you can reclaim the floor, but if you don't break the cost basis or even one of them, you're not going anywhere. So I would say that 253.32 would be a proper rejection mark. And if it breaks right? It's going to give me a new high in retrospect to the box, which would be cost basis. And if you reject cost basis, then you're going to rinse and repeat. If it comes back down and closes underneath, we're going to be looking for all of this to punch back again. And then we're going to be using the lower time frame where this is the box, right? You bounce off of that cost basis. That's right there. So we know that when the wick is filled, right, this right here has its own cost basis. When that is filled and broken, and we open definitively below, yeah, I say 240, 280, we will go make a new low. And there is a big imbalance, basically, from here down to here. And so I would be banking on a 227.80 move. And if that's something that I see on the 4 hour, then, obviously I should be able to narrate that on a lower time frame. And yeah, we do have an imbalance. And one of the first places to bounce is 231, which of course we're not going to try and predict how price moves. So last mention, last recap here. Obviously we've had great trades on NEO. This is another punchback candidate where, again, we identify where buyers and sellers and cost basis. And again, this is a reminder of how important candle closures are. And if you hit resistance and close under cost basis 9 times out of 10, you're going to fall. And then the same thing, goes for, I don't know why that got moved, but the same thing goes for right there, where you also have a cost basis mark. So as you can see, NEO makes a new low, is unable to go in the box below it, reclaims. So every time you do this, look, you actually get a punch back again, then a punch down, you make a new low, which in retrospect to the box, then you open up on the floor. If you open up on the floor, you're going to cost basis breaks. Look at how sellers try and pull that down. That's why we don't use candlestick analysis. And then following day, we open up in that bottom box after triggering the punch back, and it is nothing but a rip. And that was amazing play. We had a great play on that. So anyway, it is an identification of buyers and sellers and cost basis, and then reacting to that. So anyway, I will have more content on the PotterBox punchbacks. There is obviously within the Discord, I teach all of this stuff live, but there is recorded examples of this playing out. And mind you, we did take every single one of NEO's legs up was caused by a punchback. So even NEO on this lower time frame with this crazy wall and this crazy floor and its crazy cost basis, you end up bouncing, breaking first candle that opens above that mark, and you end up ripping into a new high. So alrighty, everybody, I will see you all in the next live session. Those of you guys in the Discord, if you have questions about this video or anything that I've talked about, which you should, write them down, bring them up in our live trading, and then that way I can answer them. This system works. It does take work, but if you start on the weekly and the daily where the biggest moves are implied and work your way down, you should be able to figure this out. And that's it. Y'all have a great day. Thanks for watching.